Welcome to Ask Fear and Greed, where we take your questions and do our best to answer them. I'm Michael Thompson, and hello, Sean Aylmer.
Hello, Michael.
Sean, good question today. It is from Lily via Facebook. And if you have your own question, you can jump onto Facebook or Instagram or LinkedIn or head to fearandgreed.com.au and send your question into us, and we will pop it on the list. Lily says, I know it's earnings season. Every day we're hearing about companies meeting expectations, etc., etc. The email actually says, etc., etc. But there is so much information when a company gives its results. What should we be looking at or looking for? Where do you even start? And there are 3 question marks on the where do you even start? So it feels a little bit like Lily is desperate for some help on this one, Sean.
What an excellent question. Understanding what's in a profit report isn't for the faint-hearted, Lily. Take the Commonwealth Bank presentation with its results yesterday. It was a mere 128 PowerPoint pages. Then there was the annual report. There was the climate report. There was the Basel 3 Pillar 3 disclosure. Absolutely no idea on that one. As well as the actual announcement to the exchange, plus more. Just reams and reams of paperwork. It is very hard for highly paid investment analysts to understand fully what companies are reporting in their results packages, and they make a living out of it. I know for a fact that companies can work very, very hard to hide certain information in profit packs. I also know that analysts pore over the information for days and days to understand what's going on. And some companies are far bigger and more complicated than others. Banking and insurance is particularly complex. So what hope do we mere mortals, Lily and I, you, Michael, you're less than a mere mortal, what hope do we have?
A submortal.
So the short answer, but I'll give you more. The short answer is use a financial advisor, right? They normally get their recommendations on what's good or otherwise from these professional analysts. That would be my recommendation. Beyond that.
Can I ask you a question that would kind of perhaps lead you into where you would go? You have been a reporter, a journalist covering, I don't know how, I wouldn't even want to guess how many earnings seasons you have covered. I'm guessing it would decades and decades and decades.
Settle.
Sorry. And so you you wouldn't have time necessarily to go through everything in a lot of detail. Are there some kind of headline pieces that you look for?
Yeah. Net profit. Is a company making money? What's been the trend over time? Dividend, going up or down. Profit margins, increasing, reducing. That kind of introduces the notion of revenue, top line growth, what's happening to costs, that sort of stuff. Return on equity, really simple metric for shareholders. Then you've got to look at stuff like the sectors that they're operating in, like comparing a bank to a retailer to a tech stock is vastly different. The life stage of a company, a startup might not make money, but be in a better position than a mature company with a steady stream of profits. The macroeconomic climate, a bunch of companies kind of got stuffed up in the last couple of years as interest rates rose. Suddenly their debts and what they had to repay every quarter increased. That mucked them up a bit. How results compare to expectations of the professional analysts. They're all kind of the things that I suppose as a journalist I would look at. Or, Lily, maybe just fall back on Warren Buffett's rule for investing. I mean, it's fairly simple. There are 2 rules, or his 2 main rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1. That's another option.
That is very good.
But maybe actually the very best, I don't think, well, certainly I don't have the capability to look at an annual, that earnings season, to look and trade on it. It's too hard for someone like me. I don't understand it enough. And I think many investment analysts who are paid a lot of money to do this kind of are a bit the same. Maybe the best idea is actually to keep an eye on the share price for a couple of weeks after a result, not just 24 hours, but actually over time, because over time, these experts do go through the results, work out what's good, what's bad, and then they make those buy-sell recommendations. That kind of trading over a couple of weeks probably gives a good indication, or as good an indication as anything else, of whether the earnings result is good or bad. So, read the media releases, Lily. That's probably if nothing else, you can read the media release. You get an idea, but that's always got the spin of the company on it. But I think watch the share price moving.
And I like that point that you made about how the result compares to expectations of the professional analysts, because often there is kind of coverage in the lead up to results being reported about what people are watching and the expectations. And then you kind of pinpoints the things that other people are going to be watching, and that might help you zero in on what you should be looking at as well.
Yeah, totally. And companies guide the professional analysts towards a range of profit. So what you'll find, you can have a profit triple and nothing happens to the share price. It can cut in half. So JB Hi-Fi earlier in the week, profit was down and its share price jumped, high, sort of 7 or 8%. It's because it was better than expectations. So it's less about kind of year on year. It is all about those expectations and what professional investors expect to see. And that actually, the short term, the very near term share price moves really reflects the result versus expectations.
That's some fantastic lessons from your many decades of reporting, Sean. Many decades. I'm certainly rounding this up a little bit. Remember that time that I described you as having worked in the media for the better part of half a century? And because it was like 26 years or something, technically I was right, but you were most unhappy with me for that one.
I had to go off and have a nap after that. I was so upset.
Yes, at 2 p.m.
Yes.
Felt about right. Okay, thank you, Lily. What a terrific question. I really enjoyed kind of getting into that one. So thank you, Lily, for sending your question in. And thank you, Sean, for answering it.
Thank you, Michael, and thank you, Lily.
Now, remember, if you've got something that you would like to know, then send your question through on LinkedIn, Instagram, Facebook, or at fearandgreed.com.au. We would love to receive it and love to answer it. I'm Michael Thompson, and this is Ask Fear and Greed.